What is capital gains? Who gets charged capital gains and how much is it? This information is super important if you are buying an investment property today or anytime in the future, or if you already have one. So let's break it down. By the way, my name is Zamira Dunnet and I'm a local real estate agent right here in the GTA, and I'm with eXp Realty. And if you have any questions about investing in real estate, getting into the real estate market, or anything else about the GTA, you can contact me at any time. My contact information is right there in the description. Do not hesitate to reach out because I'm here to help. And if you don't want to just pick up the phone and give me a call or send a text, you can go ahead and click the link below for my calendar app, and we can go ahead and set up a 30-minute consult to go over everything you want to know. Now let's jump right into it. Now, what is capital gains? Capital gains are the profits you make from selling an asset. So we're talking about real estate, stocks, bonds, and it's how much you get additional from what you paid for it. So it is the equity that you have made in real estate from when you bought it to what you sold it for. Now, how do you calculate capital gains and who gets charged capital gains? So the way that you calculate is pretty easy. I'll give you an example. Let's say you bought your property 5 years ago at $400,000. And now that property is worth $800,000. That means you have gained $400,000 in equity or in profit of that property. Capital gains gets charged 50% of how much you had gained. So in this situation, you would be charged capital gains, so taxes, on the $200,000 out of the $400,000 that you have just made. Now, who gets charged this capital gains? So mostly it is investors. If you have bought a property that you are now renting out to somebody, and then you end up selling it, that is a property that would be charged capital gains. Now, what if you live in the property? You bought it and you moved into it immediately. People that have a property as their primary residence, they have lived in it throughout the entire time they owned that property, do not get charged capital gains. There is an exemption for people that end up living in their property the entire time. Now, people do also talk about what if you've lived in a home for a few years and then you end up renting it out afterwards. Unfortunately, you may not be able to benefit from the exemption for either all or a portion of the capital gains. Each situation is different, and speaking to a tax expert will be the best way to find out if you will be charged capital gains or not. Now, how does it work? So let's use the example that we used before, that you made $400,000 on the property that you sold. So let's say you made $50,000 in the year of 2023 as your regular income. What happens is half of that 400,000, so the 200,000, will be added on top of your income as income that you made in 2023. So that $50,000 that you made, we're going to add in the $200,000, and now your income will be $250,000 for the year of 2023. And that is what you will be taxed on. Now, there's been a change in the amount that you have to calculate for capital gains. Like I explained just now, it is 50% of the amount that you make as a profit. For anybody that makes under $250,000 in profit, it is going to stay at 50% for you. But the change is for anyone that makes over $250,000 in profit. The way that it works now is it is 67% that you're going to calculate as your capital gains if you make over $250,000 in a profit. This is why I used the example of $400,000 of a profit so we could jump into this section. So let's use that same scenario. You made $400,000 in a profit towards the property that you just sold. Because it is over $250,000, you will now be charged 67% to go on top of your income already. That means the amount that you're going to calculate that goes on top ends up being $268,000 that adds on as income over the $50,000 that you made this year anyways. So it is a higher amount that you now get taxed on if you're selling an investment property and you make a profit of over $250,000. Thank you so much for taking the time to watch this video. I really hope this information gave you the knowledge that you need to know if you are selling a property that is an investment property or a property that you just have rented out that you're now going to sell and gain some profit on. Because if you are going to be taxed on such a large amount, you need to know about it. And maybe it would be smarter to just hold on to the property, keep renting it out, and gain some more equity on it that you could turn around and maybe turn into a home equity line of credit and take it out and buy another one. So look at all of your options, look at all of the avenues before you just go ahead and sell an investment property, because the changes that they have made, as well as what capital gains is, could really make a difference in the amount of profit that you make. If you really like this video, go ahead and like it. Please go ahead and subscribe to my channel. I really appreciate all the support. I make a video like this every single week, and I make a market update every single month. So we'll see you guys all next week.